Recipes for technical trading success in Cook's Kitchen.
What is this market waiting for? Great earnings season, and it just can't seem to get up and go. I think it's waiting for the trade war. Let's look at some charts to tell you what I mean here. First off, the S&P 500 just nestled down between its 50 and 200-day moving averages. Going nowhere, can barely get any momentum. A lot of players would look at this as some kind of contracting formation, and it's got to bust one way or the other. Take a look at the NASDAQ. NASDAQ has been a strong performer because there's so much earnings growth. You look at what Apple, Amazon, Facebook, Google, Microsoft, their reports and their earnings, their sales growth and their earnings growth are fantastic. That's what's holding the NASDAQ up, but still can't get above its 50-day. Now, I mentioned that we're waiting for the trade war, and that's what's holding the market back. And I believe that because, this Q1 earnings growth that we just had it's over 20% year over year. And Q2 is going to be maybe not as strong, but as far as year over year comps goes, it's going to be very strong. So now, no matter where you stand on if the trade war is a good idea in the direction the White House is going, personally, I'll tell you my bias. I happen to think a trade war is sort of an anachronism, outdated, not very useful. But, there are some things that we need to address with China, whether it's intellectual property or some other unfair practices. Stuff does need to be addressed. So long term, we're going to work it out. Short term, the market is waiting for better answers. All right. And so here's the semiconductors. You can see the semiconductors are very much under pressure. They could be impacted if the trade war with China especially heats up. You see this is the SOX index, the Philly SOX index, sitting on its 200-day. I've drawn some green ellipses around 3 points that could provide some bullish structure here and support. You could call this an inverse head and shoulders since that middle point is lower. And so the SOX could get up and go from here. Companies like Micron and Lam Research are under pressure, even though they've had great earnings and great outlooks for the rest of the year. Everybody's still trying to call the semiconductor cycle top. So I think your risk reward with semis is that, hey, 5% lower and, they're all going to come down hard. But they have 20 to 25% upside. So that's your risk reward there, and that's why I drew that chart the way I did. Semis are not a direct thing on the table right now, but they're in the circle of technology that could be impacted eventually and experience the fallout of some kind of trade war with China. All right, what else is doing terrible? Industrials, obviously. Here's the XLI, the spider sector for the industrials. I've been talking about this one for weeks, sitting on its 200-day, looking sick, getting ready to go lower. Here it is, a week later, beneath its 200-day. Obviously, industrials impacted by any kind of global trade war. What's doing well? Consumers, U.S.-based consumer discretionary, because the consumer is strong. So, their balance sheets are good. Interest rates are still low. Employment, we're almost near full employment. So consumer spending is still strong. That's why money continues to go into those stocks. All right, now we're going to take a look at the Milken Conference was going on this week. So today's Wednesday. I believe it was going on Monday or Tuesday. And I saw some quotes from, a lot of different important, CEOs, hedge fund managers, investment bank strategists, and I caught the feed from a Barron's reporter who was there, I believe yesterday, May 1st, and let me just show you some of the quotes that she shared from Wilbur Ross, on behalf of the White House, talking about trade. So this is from the Twitter feed of Reshma Kapadia, and one quote that so she's paraphrasing Commerce Secretary Wilbur Ross. The normal mechanism in WTO is oxymoronic. And apparently he means, normal mechanism of trade and the World Trade Organization don't work well together. and he finds it an obsolete set of rules, more or less created to benefit exporting countries to the detriment of importing countries. That would be the U.S. Hashtag MIG Global is the Milken Investment Conference, I believe. Then what? Oh, so here's a big standout quote, the bottom one from Wilbur Ross regarding NAFTA. We'll have to deal within the next few weeks, or won't be until the fall, and who knows what happens then. So there were some other quotes from Wilbur Ross. Basically, he doesn't really care what the impact is, certainly not on the stock market, but even on corporations, because he thinks that this work has to be done now. The problem is, as we talked about in my video last week, is that if corporations, if management is worried about the uncertainty of trade, and they start making decisions now to pull back, not make new investment or expansion, that's going to have an impact on the economy. And I'm not saying it's going to push us into recession this year, but it could start to sow the seeds of one. And my big picture bias is that, hey, we'll get through this, but the stock market could face some more weakness. Maybe it's going to be a sell in May or into the summer or something. It should be a buying opportunity, though, as we get through this. There was a deadline for the steel tariffs May 1st, and that was extended. Coming up May 21st, there's going to be sort of a new event date where I think a couple of things are colliding, and the issue of intellectual property with China. Again, that stuff needs to get sorted out. We don't know how it's going to go. So I think the market is going to wait until May 21st, which I believe is a Monday, and see where that goes. All right. Reshma Kapadia also listened to one of the co-founders of Alibaba. I believe his name is Joseph Tsai. And here's her paraphrase of what the gentleman had to say regarding the trade war, or potential for trade war. Can see it devolving into tit for tat. Time for cooler heads to prevail to look at what real issues are. Ironic, U.S. producers facing greatest opportunity to sell to China's middle class, and the U.S. deciding to put down the gate. Okay, and I took this paragraph actually from her article on Barron's. She did a blog post yesterday morning. So this is to sort of sum it up. Ironic that the U.S. is picking this point for a trade war, since the growth of the middle class in China created a large group of consumers that could be a big market for U.S. companies. And so that's really where I stand, is that you've got a middle class in China that is arguably 500 million strong, and would love U.S. consumers to have full engagement with it. And remember Jack Ma, when he was on a tour here last year in the spring, the other Alibaba founder, the current chief, he said, hey, he wants, to teach American businesses also how to sell to the Chinese markets. It's a big two-way street, and I hope they get it figured out soon, so that we can keep the positive trade flowing, and correct the imbalances, as it were. All right, so May 21st, have that one on your calendar. The market's probably not going to move much higher until then, and who knows, could even go lower. I would look for buying opportunities in May, June, July. All right, thanks for checking out The Kitchen. I'm Kevin Cook.